Is Bitcoin preparing for a continued move toward the downside, or has this correction been mostly completed? We're going to take a look at the higher timeframes, the short-term trend, and of course the 4-year cycle to answer these questions. Let's get into it. Okay guys, welcome back to the channel. I hope you're all having a wonderful day today. We're here to discuss Bitcoin on the short term and of course the macro. Our two main questions we're going to be focusing on today are: what is the short-term price actually looking like? Could we see a continued correction toward the downside? / what is the possibility for a bounce? And number two being, how is the macro chart developed? What does it look like on the 4-year cycle? What are the technicals and structural levels showing us? And what we can expect going forward. Before we get into it, guys, smash the like button, hit the comment button, and of course subscribe to the channel, guys. We do daily videos on Bitcoin, focusing on the market data, the TA, the structural data, no BS, no emotion, no hype, pure raw technical analysis. You can also find us on Telegram, the second link down below. You've got access to charts, updates, analysis, information, videos, educational posts, news events, and so much more in here, guys, between our videos if you like our content and want more of it. You can also join our Telegram channel for the VIP group if you're interested in trading signals. You'll get trading signals with exact entries, exact targets, exact stop losses, exclusive analysis, updates, and a whole bunch of additional stuff, such as our group chat. So you'll get access to our trading chart and education group chat, all our members in here, our general chat, our help chat, and of course additional videos when we post. All that information can be found, including our entire trading track record, in that pinned comment in the free channel. Of course, guys, contact me for more information. Let's get into the video, guys, and you're gonna have to excuse my voice today. I am starting to feel a tiny bit sick, but we'll get through it anyway. 24-hour volume is down 46.64%, and that is pretty much expected, right? It's not too out of the ordinary. It is Sunday now in Australia, so Saturday night in America. The weekend volume generally does come down a bit, and with decreasing volume, we get decreasing volatility, and with decreasing volatility, we get decreasing liquidations and price action. And therefore, we have seen about a 76% drop in liquidations, bringing it under 50 million. So it is quite low with the liquidation department over the last 48 hours. Looking at the monthly rate of returns, I can see Bitcoin is actually in the red for April, negative 2.95%, guys. And April is generally quite a bullish month for cryptocurrency, but we have seen now a negative 2.95% as of current. There's 7 days left of the month. We're most likely, if we keep this up, going to be closing out red. We'll keep an eye on it over the next few days. Volatility at 2.1, bouncing just a small amount on the 30-day period, and on the 60-day period, still looking as it's coming down to 2.94% over here, guys. So volatility overall has been reducing over the last couple days. Let's take a look, guys, at the DXY. The DXY has found a potential bottom for the short term on this horizontal support around 100 to 101.4. Of course, this is a very important bounce zone for the DXY. The DXY does fall below this level. We can expect a continued crash toward the downside, targeting this next chunk of support sitting around 97 to 96.5. If we do bounce from this level, we can expect a rally all the way back up to retest 104.5. And of course, if we do bounce, this is going to be bad for Bitcoin. This is going to be bad for traditional markets. Now, on the short term, we have looked like we have developed a double bottom formation. Of course, we have two equal lows over here. Okay, we have got, of course, a bullish engulfing candle on the daily chart over here. You can see our bullish engulfing candle, and of course we do have a breakout of that current downtrend. So this hasn't been a very strong breakout. We're gonna have to wait and see what the weekly open does for the DXY. We can see, however, we have actually broken out of our downtrend. We do have the bullish engulfing candle. We do have a possible double bottom. This could result in a continuation upwards. It does look like we are in some sort of bullish consolidation over here. We do have decreasing RSI, decreasing price, of course, after a breakout. This could very well break toward the upside and result in a continuation up for the DXY, looking to hold above this local low. So the open is going to be very important. If we do start pushing below and closing below these low levels here, particularly as a local high, we are going to see a fall back under this trend and continuation back towards this double bottom low, potentially breaking that and sending the markets even higher. So definitely keep an eye on that, guys. It is very much on the fence over here, slightly leaning towards a move upwards, then a move downwards, at least for the short term. This could be potentially bad for stocks and for Bitcoin. Looking at the stock market, we are at resistance. The index over here, the S&P 500, does suggest we are sitting at a very strong neckline resistance. This neckline resistance has now lasted over 430 days. Actually around 422 days, my bad. So it's still quite long. This is greater than 1 year. This is an incredibly strong trigger point and resistance. We saw a deviation above it temporarily all the way back in August 22. Again, failing to really stay above it is eventually resulting in a break toward the downside. We have now seen multiple retests of this level over the last year. None of these have resulted in a break up. So we do know this is an incredibly strong resistance, and strong resistance becomes strong support. What we can say is a break over this level will result in a continuation upward to retest this upper resistance of a possible ascending channel formation. We could potentially clear or at least retest the highs from that range. I'm going to go ahead and draw that in one more time because that was absolutely pathetic. Here we go. Okay, test the highs of this range, so sitting around 4,300 to 4,400. So keep an eye on that, guys. Of course, if we do break down here, if the DXY does move up and we do lose this current support range we are sitting on as per the VRPV, we can see we have a decrease in the VRPV until around 4,000 again. So we can expect a move all the way back down into that chunk of support if we do lose this current level and get rejected. Looking at the Dow Jones over here, guys, similar thing is occurring. We can see we do have our uptrended dollar support line right over here. This is going to be a key magnet level or a level of support if we do get rejected. A very similar resistance we are seeing develop over here on the Dow Jones. Again, this is a resistance that has basically lasted around about 265 days, and we can even extend that a little longer to around 200, 300-ish plus days. So again, greater than 1 year resistance here on the Dow Jones. This is going to be another key trigger point. A break over this level will result in a continuation upwards, potentially all the way up to 36,000. But if we do reject from here and start to lose this current support we're on, which will be determined by the DXY over here, depending on the direction it goes, we could potentially see a strong correction over here all the way back down to our dollar trend line. Again, that would be very catastrophic. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Look at the data, look at the charts, look at the facts. The charts are a phenomenal tool. The charts are visual representations of human psychology and data. The charts visually represent the data which is actually going on in the markets. When we have falling rates, we can see the charts positively respond and respond to that. When we have certain market structures, such as falling wedges, descending channels, rising channels, all of these structures can tell us a narrative about the strength of the price and what the price action is doing. They can tell us a story. They paint a picture in regards to what has happened. I'll give you one example and then we'll get into the price action. So, falling wedge structure. We broke out quite aggressively, okay? Now, what does a falling wedge represent? Well, most of you know, if you've got a preliminary understanding of technical analysis, you'll know a falling wedge is one of the many different market structures we see when trading the financial markets. In particular, a falling wedge is known to be a bullish pattern. But why? Why is it a bullish pattern? Well, a falling wedge represents a few things. More importantly, it represents a reversal pattern. The reason it represents a reversal pattern is because you have compression in price action. moving from the top side to the bottom side, you have an overall compression. Compression represents in price action decreasing momentum, velocity, volume, and volatility. If we see decreasing velocity, momentum, volume, and volatility at the end of a downtrend, okay, this was a downtrend. We had our descending channel formation. This is our bear market. We had this at the end of a downtrend. It represents a shift in strength. It represents a shift from bearish to bullish strength as the bearish trend is weakening. This is bearish weakness. It is bullish strength. Therefore, it resulted in a reversal. The reversal took us upwards. It took us upwards quite a bit. In fact, it took us up well past the measured move target. If you remember, the measured move target was, of course, the high to the low, take that to the breakout target, apply it. It took us up to the next resistance, which was sitting around 25.2K. This was our first target from the breakout. We said the breakout, we're expecting to move to 25.2. That was our first target. We flipped bearish at 25.2, expecting a correction. We saw a correction, and we said every single drop that remains above 18,300 is a bullish consolidation, and we expect the uptrend to continue. The uptrend continued to 30,000. 30,000 being a major point of resistance on the charts. In fact, 30,000 being the yearly low of the prior cycle. We can see in the 4-year cycle, these horizontal red lines represent the yearly lows of the prior bull run cycle. We can see every single time we break above that level, we end up going into a macro uptrend. So let's get into the Bitcoin analysis, focusing on the 4-year cycle first. Then we'll go over to the short-term price action, and then we'll finish up with our entire technical analysis with everything else. So the 4-year cycle is represented by these different color zones. We have our red zones, our gray zones, and our green zones. Every zone tells us a different thing. The red zone, of course, is our bear market. Our gray zone is our neutral. And of course, our green zone is our bull run. We can see that each zone lasts for an average of 13 to 19 months, depending on the zone. We have 13 to 12 months for bear markets. We have 16 to 17 months for consolidations, and we have 19 to 18 months for bull runs. Looking at the price action, we can see we have a few horizontal levels. These are incredibly key levels on the chart. We're going to go ahead and explain this in a second. So first and foremost, 30,000. The level we are testing now is the major macro bullish trigger. I've been saying this the entire time. We need to see a monthly close of a 30,000 to get any sort of macro continuation upwards. A monthly close of 30,000, as per the data on the macro chart over here, will result in a flip of the prior bull run, a yearly low, and therefore turn strong resistance into strong support, which will provide the basis for a continuation upwards into the bull run. Now, that is our key level. The second key level is the dotted line. This is going to be the first high from the dead cat bounce after the bull run top, okay? Bull run top, first high from dead cat bounce, okay? Huge bull trap at that point in both 2018. We saw a massive bull trap. We saw a massive bull trap in April, May 2020 as well. If we close above this level, we can see a monthly close above that level. That is when the parabolic phase of the bull run really starts to kick off. Meaning, if we break and close a monthly candle above 48,000, that is going to be a trigger for a new all-time high. So we have a continuation trigger at 30. A break over 30 will result in a macro continuation upwards. A break over 48 will result in a new all-time high being confirmed. That will come in at any point, of course, during that next bull run. So keep your eyes on that. When will the bull run start? Well, we can see, guys, on average, the bull run starts around 17 bars post bear run or bear market bottom. According to the date range trend, we can see the bull run is expected to start between March 2024 and of course April 2024. What we can do as well, we can use the Ichimoku cloud, particularly a particular line such called the baseline. If we bring up the baseline on the chart over here, I'm going to make it a little thicker. We can see every single time, guys, we close a monthly candle above the baseline, we generally actually close at around the same time we actually enter a uptrend on the macro scale. And not just any ordinary uptrend, because we are in an uptrend now, but we're talking about a yearly uptrend that will result in a new all-time high, or of course put us into a bull run. So there's a 4-year cycle, guys. As you can see, we do need to break above 30,000. Incredibly important. I think this is the best way to explain how significant this 30,000 level is. We 100% need to get above 30,000 on the monthly chart to see any sort of continuation upwards. And as you would know, guys, if you've been following the channel, we bought Bitcoin at 18,000 to 16,500. We sold at 30,000 right at that yearly resistance because we expected a continuation downwards or a strong rejection first. So what is the short-term price action looking like? We'll jump into that in just a moment. Let's go to the daily chart first and do our TA and then get into that short term. So as we can see, guys, we did have a bearish divergence develop on the daily. This is old news now. We were talking about it for weeks leading up to it. We saw a correction from 30,000. Here is the interesting thing. The correction from 30,000, according to the bearish divergence, is very well played out. We are now retesting the Gaussian channel on the upper band. This is either incredibly good or incredibly bad, because when we break below the Gaussian channel, we generally continue to the midline or through the Gaussian channel. Now, if we look where the Gaussian channel is sitting, we can see the Gaussian channel is moving upwards, and that lower level of the Gaussian channel is that 24.4 to 25.2 support. Now, we know that if we drop below 24.4, we are losing a 258-day long support level, which will result in a continuation even lower, which could potentially be catastrophic for Bitcoin and puts us into a danger territory. Remember, this over here is incredibly macro bullish, okay? This over here is bullish. This over here is worrisome, and this over here is bearish, okay? Under this level is bearish, between these levels is worrisome, up above 25.2 is very bullish, and of course up above 30 is macro bullish. So the Gaussian channel suggests if we break into the Gaussian channel, which we are now retesting support, and we continue through it, we are more likely to actually drop below it, which of course could result in a high time frame correction that takes us under 24.4, and that will completely shift the macro environment for Bitcoin in terms of the macro chart. However, while we retest the upper band, it does give us a potential for a bounce, and we'll discuss that on the short-term charts. Let's get into one more thing on the macro, and then we'll get back to the short term and come back and talk about what is happening. So really quickly, guys, on the macro chart over here, let's take a look at some more indicators. The MACD, the RSI, of course, and of course the market size of B, and then we'll jump into the short term and discuss what is happening on the short term. So this is of course a weekly chart. As we can see momentum in the last week has weakened. We are still very much positive. We can see we have overall positive momentum over here, of course printing a light green wick over here. What does this suggest? It suggests positive weakness. So we have weakening positive momentum. We can see the market size of B hasn't yet printed a red dot, but our blue and our light blue is converging, again suggesting positive momentum, although it is weakening positive momentum. The RSI is potentially breaking over the SMA over here, the 14 SMA, which again is a sign of potential weakness. So on the weekly chart, we have not really had that shift to negative momentum yet, and again that is a great thing considering we are at potential support over here, but it is starting to look very grim on the weekly chart and definitely something to be considering. Let's go down to a 3-day chart. So the 3-day chart over here, guys, let's take a look once it loads. Okay, on a 3-day chart, we can see again these bearish divergences have been popping up. You can see a bearish divergence here on the RSI. We can also see a similar bearish divergence popping up right over here on the market side of B. And of course, we'll see overall weakness in the MACD over here, crossing downwards, actually printing a bearish volume candle, suggesting that momentum has definitely flipped downwards. And we do have strengthening negative momentum. Okay, we don't have bearish momentum, because bearish momentum requires us to be under the 0 point, but we have negative momentum, okay, as we do have a red candle. So this again suggests overall weakness in the current momentum. Let's go down to a 1-day chart. And again, we can see similar things that we saw before. If we go ahead and delete all that, we can see again, same thing over here. We see the RSI has dropped quite a fair bit after that. The MACD is crossing over. And of course, we printed a red dot right over here on the market side of B, again, doubling up on that bearish divergence, suggesting the overall macro trend is definitely weakening. So let's get into the short-term price action, discuss what is going on. As we can see in the short-term price action, we lost a critical uptrending support. This uptrending support, of course, was this level over here, which kept the price upwards. We are now retesting lower support ranges and has entered and retested the support slash resistance, now resistance at 28 to 27.8. This is an incredibly important level, as you would know already. 28 to 27.8 marks the bottom of this current higher time frame resistance level. This resistance level being that yearly resistance according to the 4-year cycle, again according to the prior bull run. So we've retested out now in the short term and we have rejected. The next key level we're looking for a continuation to is going to be 26.8 to 27.5. Again, a break into that level will confirm the breakdown on the Gaussian channel here on the higher time frame on the daily, and that will trigger a continuation inwards to 26,000. So here is what we expect, guys. If we do see a break and loss under this lower support, we can see almost immediately our support dries up. We have very little support between our POC, okay, our POC point of control at 24.6, which sits between 25.2 and 24.4 support, okay? That is a support level. Let's go ahead and mark it out really quickly. Okay, we have a support level over here. We have very little support between 26.6 and 25.2. In fact, we have almost no support. Now, this is where it gets very interesting. If we do lose this level, I expect volatility, volume, and velocity to kick up. I expect a continuation downwards. First, initially to retest 26. 26 will be a psychological support and a possible location of which Bitcoin could find support at. If we do not find support of it, we will continue into this lower chunk. If we do find support, we could potentially continue upwards. So that is what our structural levels are talking about. For the bullish scenario, guys, we're going to have to start reclaiming some of these major resistances. The most important one being 28. You can see 28 is a huge resistance according to the VRPV. If we do break above 28, it's going to be progressively easier for the price action to start moving up and up. Again, as per the VRPV, you can see we zoom in on a very small time frame over here. We can see the POC is sitting at directly 28, and if we break above 28, it's going to be progressively easier for a continuation upwards to retest this upper range. So short-term bias right now is still downwards. We've been short-term bias has been bearish since 30K. We said a 30K was selling a Bitcoin. We expect a correction to 25.2. This correction to 25.2 could be cut short if we do not break below some of these supports, or if we get back above 28. If we get back above 28, we could see a push back up to retest 28.6, 28.7, but it doesn't even matter, guys. It really doesn't matter. We still need to see the monthly candle close of 30,000 for us to flip again bullish. We are short-term bearish on Bitcoin. We'll only be flipping bullish again on Bitcoin above 30,000. Now, that doesn't mean that the overall trend is down. The overall trend is still upwards. We're still in an overall uptrend, guys, until 24.4K is lost. If 24.4K is lost, that is when this overall reversal uptrend has been lost. And what I like to do in times like this, when, you know, there's a little bit of indecision, a little bit of uncertainty, flip the chart. What does it tell you when we flip the chart? Are we at resistance? Are we at support? Well, if you saw this on the flip chart, what would you think? Would you think we're going down? Would you think we're going up? And we can see the Gaussian channel is now acting as a resistance. So we do have a possible point of a bounce over here, a possible reversal point on the short term. If we break it down to an even smaller time frame, such as a 4-hour, we can see on the 4-hourly chart, we do have a potential local top area where we found a decent amount of resistance. Again, we do not expect a continuation upwards here, or if it was inverted downwards, okay, unless this level is cleared. Where is that level? 27,000. So 27,000 is now acting as a temporary buffer between the correction towards between the correction underneath that 26.5, which will take us even lower, or of course a break over 28. So keep your eyes on the short term, guys. Again, not too much expected to happen today. This is of course a weekend. We do expect a lot happening on the market open. So watch the market open, and of course watch this upcoming week, because it's going to be an incredibly important week to determine the overall direction for the markets. As the DXY will be opening, the DXY is likely to make a macro move, and of course the markets will of course follow, especially after what has been such a significant crash. Is Bitcoin going to be able to recover this week, or are we going to see a break and loss of this lower level, which will result in a continuation lower? I'm going to sign off there, guys. If you've got any questions, leave them down below. Thanks for watching. Join the Crypto Academy courses at gmail.com for an email. Send us an email there. You can find our 10-unit course. We teach you everything from TA to structural analysis and candlesticks, everything in between. You can find more information. Send us an email. Thanks for watching. See you tomorrow.